Hello, you are watching FBS Forex Review for the week from August 18th to August 24. My name is Елизавета Belugina, and in a while I'll be joined by my colleague Kira Yuhtenko. So let's start discussing the prospects of the next week with US dollar, as it takes part in all currency pairs which we'd like to discuss today: Euro dollar, Pound dollar and Japanese yen US dollar. During the second week of August, US dollar strengthened in all of these three currency pairs, but weakened versus commodity currencies like Australian, New Zealand dollar and Canadian dollar, and as well as against gold. The most important event in the past week in the US was a substantial decline in the retail sales growth, and this release encouraged the speculation that the Federal Reserve won't raise their interest rates earlier than expected. This diminished the enthusiasm of the bulls. Next week, we'll be able to learn more about the position of the Federal Reserve. On Wednesday, the central bank will release the minutes of its July meeting, and on Thursday and Friday, the Fed symposium will take place in Jackson Hole. So, how this information will affect the greenback? On the one hand, there were a couple of bullish things in the meeting. Firstly, it was said that the probability of low inflation has somewhat decreased. Secondly, the Philadelphia Fed president voted to tighten monetary policy. On the other hand, there is serious dissent in the FOMC, and the minutes will likely reveal that. Many members of the committee, including Janet Yellen herself, wouldn't like to hurry with moving away from the policy of low rates. In addition, the retail sales have shown that US economic data aren't unambiguously positive. So a conclusion arises from here: we shouldn't expect a powerful advance of the US dollar. The scenario we prefer is that the greenback will remain firm on Monday and Tuesday, but then return lower after Wednesday. Although fundamentally US economy is currently much stronger than the European or Japanese one, the market has already priced in the 4% jump in American GDP, and now to continue a confident rally, US dollar needs new data and so-called new news. Let's move to the other currency pairs. During the past week, there were several weak releases in the euro area. The industrial production declined and the GDP growth was zero. At the same time, deep down, everyone was probably expecting something like this, so the market's reaction was rather modest. At the same time, bad data will certainly do their job later, because the difference in condition of US and the Eurozone's economies is now evident, and the pressure on the European Central Bank to increase monetary stimulus will rise. And this is certainly a negative factor for euro. One thing which may hold the bears is the concern that their current position on euro has become too large, and the short positions can fold anytime, making euro suddenly jump. However, such possibility itself can't be a reason to purchase euro. Still, it's necessary to remain cautious and probably put tight stops. Next week, there won't be many important data releases in the euro area, and those which will come out rather late, only on Thursday. Some economic indicators are hard to predict, for example, US non-farm payrolls, but here in the euro area, the situation is, I think, clear. The negative expectation will likely limit the euro on the upside, and I think that the pair's direction will depend next week primarily on data from America. And now to the technical picture. The most popular currency pair has spent the week between 1.33 and 1.34. On the daily chart, the 100-day moving average at last went below the 200-day one. And this means that despite the current lack of movement, the downtrend is becoming more and more prominent. At the same time, if the bears want to make a significant move down, they need to make the pair close below the weekly Ishimoku cloud at 1.3320. In this case, they could hope for a decline below November low at 1.3295, and let's say for a bigger decline of more than 100 pips below the cloud. Taking into account the general downtrend, our preferred strategy remains selling euro on the increases. Resistance is at 1.3470 and at 1.35.
Hello dear traders, my name is Kira Yuktenko and we are now going to discuss the prospects of the British pound. The cable had another bearish week, plummeting below the 1.67 support on weak UK wage growth data and dovish Bank of England quarterly inflation report. Even as the conditions on the labor market improved, the average weekly earnings fell by 0.2% year on year. This was the first negative reading in 5 years. The Bank of England revised down its 2014 wage growth forecasts, dampening the rate hike expectations in the year 2014. Real wage growth is lagging far behind the inflation, limiting the household consumption ability. Investors are now aggressively building short positions on the British pound, and given the shift in Bank of England commands, it seems now very difficult to find any reasons to buy the British pound. The technical picture for GBP USD is clearly bearish. Break below 1.67 confirmed a top formation at 1.6190. This is the 6-year high hit in mid-July. The cable is currently testing the 200-day moving average at 1.6650. We see that the pair has currently found some support here, but we believe that the upside corrections are limited. The daily Ishimoku cloud is giving out negative signals. We see the bearish cloud and the dead cross active on the daily chart. In our view, a break below 1.6650 will open the way to the 1.63 area. This is 38.2% Fibonacci from the 2013-14 rally. However, we have to admit that the pair is oversold these days. Resistance lies at 1.68 and 1.6880. We may see from the weekly chart that this is the 20-week MA, former support for the pair. Next week will also be eventful for the sterling. Watch the July inflation data on Tuesday. In June, CPI increased by 1.9%, almost reaching the 2% Bank of England target. If consumer prices grow slow, selling pressure on GBP may increase. On Wednesday, the Bank of England will release its meeting minutes from the August 7th meeting. We'll see if there were any changes in votes inside of the Monetary Policy Committee. On Thursday, watch July retail sales and public sector net borrowings. Japanese second quarter GDP release was one of the most discussed events on the past week. Economy contracted by almost 7% from April to June, following a 6% growth in the first quarter. It was the sharpest decline since the year 2011, when a powerful earthquake paralyzed the country. On the one hand, Abe government warned us about the short-lived economic slowdown following the sales tax hike in April. Japanese households strongly reduced consumption in the second quarter after mass purchases in the first quarter. However, skeptics have already declared the failure of Abenomics. In our view, it's too early to evaluate the effect of the Abe reforms. We need to see the third quarter figures. However, we still have some questions about the tempo of the Japanese economic growth. There is an increasing pressure on the Bank of Japan to add monetary stimulus in the current economic environment, but the regulator will do everything possible to avoid this measure. Market understands that that's why the USD-JPY reaction to the Japanese economic downturn is muted. This week, USD-JPY extended the recovery from the last week's 101.50 low, but faced resistance at 102.60. Note that the price holds above the long-term triangle resistance and above the weekly Ishimoku cloud. Despite the generally positive dynamics, the market sentiment remains highly uncertain. We see a range of candles with small bodies and long shadows. We recommend buying the pair on a break above 103 with an initial target of 104, or in case of a bearish tendency, selling on a break below 101.50 with a target of 101. Japan will release its July trade balance on Wednesday. Increased trade deficit will likely push the expectations of additional stimulus up and support the USD JPY rate. Next week, the major focus will be on the US data. However, strong figures will also increase demand for the US dollar. We should also pay special attention to the news on the geopolitical front. Any increased tensions will stimulate the demand for the Japanese yen.
Thank you for your attention. Visit fxbazooka.com for more market analysis and forex news.